Dear students and sorry, working accountants, welcome to my Expert Tally Prime YouTube channel. My name is Babu Rao. Today, in this video, we are going to discuss about the RCM entries for GTF rate. That is GTF rate under RCM. So before entering into the topic, a request to you, everyone visiting my channel and watching my videos, please don't forget to subscribe my channel as well as click the bell icon next to the subscribe button and select all so that you will get notification for all the videos which I upload in my channel. And also you share my channel with all others, right? Then another very important thing is, so everyone watch every video till the end. Don't skip in the middle. If you skip in the middle, so you will know the topic or the subject up to that point only. So the balanced topic or subject you will not want, you will not understand. So it will be like half knowledge. It is waste of time, nothing more than that. There is no use. That is why watch every video till the end. Even required, if required, you watch more than once, twice or thrice you watch, you will get a very good knowledge. And also you work out or practice the examples or problems or anything given in the shown in the video. You try for yourself all the problems which I did or other problems which are given. All these you try many times. That is twice, third, three times or four times. You try that so that you will get expert knowledge on that particular topic. Okay. And also after watching the video fully, completely till the end, if the video is good, please like the video. If you like the video, the YouTube people will share this video, that particular video, to many people so that many people can watch the video and learn this topic. Now we will enter into the topic. So today our topic is, in the last video, we discussed everything about the reverse charging mechanism and the particularly GTA under the reverse charging mechanism. So there are other services also. The entries for the reverse charge mechanism will be the same for all the other services also. But for transport, reverse charge is 5% and forward charge is 12%. That is the rate. For all the services, the rate of tax is 18% is the GST. That's all the only difference. Everything is same. And yesterday we discussed that when how to make the entries. So we learned about the theory, everything about the rules section, about the provisions. And now and then now how the recipient of the service, the buyer of the service will enter this freight weight to the GTA in his books. Okay, for that everything is same. So creating the company is same as any other company. And then after creating that, we'll go to the F11 features. Then whatever the features required, accounting features. In addition, this is the service we are receiving, and our business will be purchasing and selling of goods. This is one service we are receiving. Our business is selling and purchase of goods. So inventory features we have to enable, and on the right side we have to enable the goods and services tax. For goods and services we have to calculate the GST. So we have to enable that and give all the details, and then accept the features also. That's all calculating the company. And in the ledgers, we will create the party ledgers, that is goods transport agency with the name. The name of the party, we will create the persons. That is the goods transport agency or the transporter accounts we will create. So the creation of that is the same, no problem. All these goods transport agencies are the transporters from where we purchase the service. They are all creditors. So creditors ledgers we have to create, and then and that's all. And then we have to create the expenses. That is, goods means we'll create the stock items, but in this case we are receiving the service, so the service is transport charges. So transportation charges paid to the GTA. So for that we have to create. But in the GT, in the case of the GTA, for the unregistered, the GTA is unregistered, definitely only RCM is applicable at 5%. In the case of a registered GTA, so he has the option, he can select 12% under forward charge mechanism or 5% under reverse charge mechanism. If he selects only 5% on reverse charge mechanism, even though registered, so 5% RCM will be applicable to us. So unregistered 5% RCM, registered also 5% RCM will be applicable. If the registered transporter or GTA, if he opts for the forward charge mechanism at 12%, then only we have to make that entry. So for that purpose, so reverse charge mechanism will not be applicable. That means under the reverse charge mechanism, GTTA will not charge any tax GST in his bill. He will mention the GST is payable by the recipient under reverse charge. So we have to, the recipient has to pay. But under the forward charge mechanism, if he selects, he will mention. So forward charge mechanism at 12% is selected, is opted. You will do that and he will charge the tax. So RCM, you will not charge tax, we have to pay. That's a supply, receiver will pay. That is the recipient of service has to pay under reverse charge. In the case of forward charge mechanism, so that amount will be charged in the bill. So we have to pay. The recipient has to pay to the transporter. He will pay to the government. He will get the RCM only. No, they will get the ITC only. No RCM liability. In the case of RCM, so liability is there. RCM liability has to pay, and then he has to claim. Pay him after payment. He will get the RCM. ITC also he will receive. So both payment of liability and ITC in the case of RCM. In the case of forward charge mechanism, we will pay the money to the transporter. So only ITC will be there, no RCM liability. So for the transport charges, we have to create two. Because one is for reverse charge and one is for forward charge if the transporter selects them. So for the RCM and for the forward charge mechanism, FCM, we have to create two separate ledgers because they are different. One is RCM, one is non-RCM. So for the RCM, we have to give one name. We can give the name, any name, but better is freight charges under RCM or freight charges within brackets RCM. So RCM freight charges will come under 5% RCM. And for the forward charge mechanism, we can change the name to avoid the confusion. That can be given as transport charges within brackets, transport charges within brackets FCM, forward charge mechanism at 12%. These service ledgers, that is the freight charges as well as transport charges, there only, and in there we have to give the rate for RCM. In the ledger we have to give rate of tax 5%, taxable 5%, and then we have to make the reverse charge mechanism applicable. Yes, we have to make the reverse charge mechanism applicable. In the case of forward charge mechanism, we have to give a rate of tax taxable at 12% and forward reverse charge mechanism not applicable. So these are the settings to be made in the expense account, that is the freight or transport charges. So all other things are same. Like that, we will make the settings. Then the whole month we will enter the transport bills under reverse charge mechanism or under forward charge mechanism. We will make the entries for the whole month at the end of the month. So for forward charge mechanism is already paid to the transporter. There is no liability to us. Automatically you will get the ITC. That's all. For RCM 5% only, whatever entries are made for under the reverse charge mechanism. So for all those bills, so liability exists for the payment of the reverse charge mechanism liability, and we have to claim the ITC. So at the end of the month, so the whole liability for the whole month, the liability under the reverse charge is to be created, and the ITC to claim, that is also to be created. So ITC, liability and ITC both are to be created at the end of the month, because in every bill, the transport agency, he will not charge any tax. That is why in our books also, in the purchase voucher, we will not enter any tax. For FCM, we will enter. That will be paid to the transporter. In the RCM, we will not mention any tax. That's why the total tax payable under RCM will be created. Liability will not be there because we are not making entry for tax. So the liability is to be created and IT is to be created at the end of the month. That's all. And the these transactions are mentioned. They come under the GSTR 3B because this is purchase of service. So it comes under this. GSTR 1 is sale of goods or services. But in the case of purchase of goods or services, so GST 3B level. So these entries are made, shown in the GSTR 3B. That is the liability to pay under RCM and the ITC to receive. These two will be shown directly automatically. They will be shown in the GST 3B. So then when you are filing the 3B, that is next month, after completing the month, the next month by 20th, you have to file the GST 3B. So before filing the 3B, this RCM liability is to be paid, and already we created that liability is to be paid, and that claim that ITC will be claimed automatically along with other ITC for goods or services, other services for goods, purchase of goods. So we will get RCM. Okay, ITC. So all these ITC, this ITC also will add to that. The total ITC can be used for adjusting against the liability of all the forward charging mechanism. Or we cannot adjust this ITC towards the RCM. RCM liability is to be paid only when you pay, you can claim, because FCM means we pay to the supplier, seller, so he will pay to the government, so we claim the ITC. But here we are not paying it, so we have to pay, and after payment only we can claim the ITC. That's what we have to make at the end. So next month before filing the return, first we have to pay the already created asset liability as well as ITC. So liability you have to pay, and then we have to claim the ITC in the next month before filing that. After that, we can file the return. So that's what we do. So for that, there are two problems I made. Both are similar, but in the second transaction, more transactions are given. But you have to try that, because if you try that and work out, then only you will get it. Okay. So this one, I will name the first problem. Second problem, you see, you stop this is given on 24. When you create the company, any company for that RCM, so the company will be opened, created for 1st April 25, that is 25-26. So you can make these entries. You can make the entries for 25. You can make, or is already August, July is not yet come. That is why you can make, when you are creating that, you can change that books. Financial year beginning from 1st April 25 it will show. You can make it 1st April 24 and use these dates. And both 1st April 24, you can make it, change it, and you can use this. So first problem I will do. Second problem, you see here is the transaction. So just you stop it, see the transactions work out, and then again go down. So go down. So again stop it. The balance problem you can do. So by seeing this, you can work out the second problem on your own. The first problem also I am doing now, but you also try on your own. Okay, right. Now we'll go to the transaction. So here I created already reverse charging mechanism. So this is already created. There is no other difference. So it is just like any other company. Those 24 I created for 24. These two are not required. Accept. And then, so when the company is created, after creating, directly we'll go to features. But this is already created. We have to go by F11. So all these accounting features, inventory features, because we are selling goods and services also. In between, we are getting the service. And then go to this one, that is the goods and services tax. So give all the details. So this EWA bill and e-invoice not required. Okay. And then accept the service. This is completed. Then we will go to the ledgers. So in the ledgers, so what I created is without the name GTA. I created GTA unregistered, GTA registered, local, non-local, and also in the case of unregistered only local or non-local, unregistered only RCM 5%. In the case of registered only, maybe I 5% or maybe 12%. So that what I created. See here. See local registered 5%, local registered, local unregistered both 5%, local, and interstate. So interstate registered 5%, interstate registered 12%. I have taken interstate registered 12%, interstate registered 5% and 12%. All these required created, but in the problem, whatever we have, we can get. And then for other goods and services, there was a forward charging mechanism. We will get the ITC and liability in one account, CGST. So created this one in the ordinary way. So CGST, then SGST we created like any other problem, and IGST for interstate I created. Everything is done. Okay, but this is for the forward charging mechanism. For the other services or for GTA forward charging mechanism, and all other goods or services, goods purchase or sale. For that, we are using this. But for this RCM liability, we have to create and we have to pay it. For that, we created again CGST, HGST only, because IGST also, CGST, HGST, IGST. For RCM, I created again. This is for all other. This is only for this RCM. So CGST bracket RCM, but everything is duties and tax. This is same. Only the name will be different. CGST RCM I created. Then IGST RCM. These details are same. Duties and taxes, GST, IGST, and then SGST RCM. This is for creating the liability and payment of liability at the end. And the only CGST, SGST, no, that is for all other forward charge mechanism as well as all other goods and other services. For that, the purchase and sale, that is liability as well as ITC, everything. Okay, I created. Now we'll go to the problem. So here what we do is, we are actually, our business is purchasing and sale of goods. And also, so when you are receiving the transport bill, means we are purchasing the transport service from the GTA. So we have to enter in the purchase voucher only. Purchase voucher, because we can enter this in journal also. But in the journal, if you enter, suppose normal charge mechanism, for reverse charge mechanism, there is no tax, you won't enter the tax, it's not. But in the case of forward charge mechanism, FCM, so tax is chargeable, that is paid to the transporter. For that, you have to calculate in the problem. We have to calculate in the voucher, we have to calculate the GST. Local CGST, HGST, non-local IGST. But in that case, when you put that, the tax, GST will not be calculated automatically if you use journal. So if you use purchase voucher, so GST, everything will be calculated automatically. So I have taken purchase list and date is 17. So F217. So 17. So I am giving some number because they will give bill, and the bill will have the number. So just I am giving number and party name here. See, GTA unregistered from Hyderabad means local. GTA unregistered local, but unregistered or registered is required for us. Local or anything, everything is same. So okay, if 5% they select RCM, if they select 12% FCM, I made different things. Okay, GTA unregistered from Hyderabad local. So GTA unregistered, GTA local unregistered 5% only, and then okay, and then here, this is the voucher is item invoice, because for purchasing and selling of goods we use item invoice. But now we are receiving the service, so we have to make the entry for services in the item invoice. You cannot do and the accounting invoice. So go to change mode, come down, accounting invoice. So accounting invoice we click, and here this is the name of the party, enter, and the details are shown. This is unregistered, and then now we have to enter here the service. In the case of goods, item invoice, purchase will become outside. For item invoice, you enter the stock items. For this, no item, the service ledger you have to enter. So the service ledger is, this is, we are receiving the bill for the transport charges. We call it as, this is a reverse charge. For reverse charge, we call it as freight charges. We enter, we make the entry, we make the ledger. For forward charge, we created this one, reverse charge means chart for charges. So here, how it, I will show you how it is created. So for freight charges under RCM, we can write it freight charges under RCM or freight charges RCM. How it is created is same thing, freight charges RCM. So you take up both the forward charge and reverse charge, we both take up as indirect expense only. So indirect expenses, GST is applicable. So specify the details here. It will be like, as per company, we have to select specify details here. I am giving the number 1. This is SAC code, service accounting code, not HSM. Service accounting code I am given, and here also it will be as per company. So we have to go specify details here, taxable. So here, in the case of taxability, so we'll select taxable, and the rate for the rate on RCM is 5%. So give 5%, 2.5, 2.5, CGST, SGST. Okay. And then if it is if it is interest rate, so it will show IGST only. So it will not be divided. IGST 5%. And then, so for this, RCM is applicable, reverse charge mechanism is applicable. So that we have to make it reverse charge mechanism. And next one is eligible for input tax credit. It's showing for everything, for anything. When you purchase something and pay something, so we will get the except composition error. We are eligible for input tax. In some cases we are not eligible. It's okay. In most of the cases we are eligible for input service, input tax. Okay, but where is that? We have to make the option that is reverse charge is applicable on this. For that you have to go to the F12 here in this ledger when you are creating, and after the rate after the rate, next one is the option reverse charge option. Press F12, go to the right side, see GST details. Just you come down, just you come down. See, enable reverse charge calculation, make it will be no, because only for reverse charge it is applicable, otherwise not applicable. Make it yes. And below that, eligible for input tax rate, generally it will be yes, because we are eligible for input tax rate for everything except few. That is why it will be yes always. If it is no, so the first one we are making it is no, we are making yes. If this is also no, make it yes, then accept. Then here the option you will get after the rate, you will get applicable for reverse charge. It will be automatically there. We made yes, automatically it will be yes. And this also eligible for input, it will be yes. In case both are yes, it's okay. If it is anything is no, we have to make it yes. And after that, what is the type of supply? Sir, this is service. So by default, it will be service. Select service. That's all. And what is the amount we paid? We paid 10,000 rupees. 10,000 rupees. And here, reverse charge is applicable for this. So the seller, that is the transporter, will give the bill. In the transport bill, he will not enter any tax. Such as will give GST is payable by the recipient under reverse charge. So reverse charge is applicable. Tax will not, we cannot enter. He will not enter. Suppose if you try to use RCM, isn't it? CGST RCM, it will not calculate because it is not to be entered by yes. Okay. And also here you can see. So why? Because reverse charge is applicable. So go to the tax analysis, Alt A and Alt F1. You see, local tax, local purchase of service. So everything is given CGST 2.5, and the total amount is 500 rupees. And as per transaction, in the transaction, I have not entered anything, but still it is showing this. Even though it is not showing anything in the transaction, only one thing is shown. Actually, it will be wrong. But here, this is not wrong. This is not incorrect. This is correct. Why? Because here you see amount of tax. This is the tax. Amount of tax subject to reverse charge. So we are not entering. Subject to reverse charge means we have to make the payment of the liability. We have to make the payment of liability, and ITC we have to claim both liability and ITC. That is why this is showing. So it is not showing this. So no, it is not calculating. Just accept this. This is the first one. You see, in this case, how? So we have to pay the liability. We have to pay, as well as we can claim the ITC. So how it will be shown in the reports? So in the GST reports, display more reports, statutory reports. In that GST reports, so your entry is for July. So go to one is for sales. That for purchases it is 3B. See, it is July. That is why it is showing July only. Oh, 1 minute. Okay, 3B. See, for this, for the time being, it is 10%, 10,000. So this is the liability and the upside, and this is 3.1 is liability. 3.2 is also from that only derived, only interest rate supplies from this. And the eligible input tax credit we have to get. So 250 is the tax. So this is the liability. For liability only tax amount will be shown. So 250. And the fourth one is eligible ITC. Eligible, see, input tax credit available. So 250 is either in some other items, the total will be shown. This is the actual amount. This is the actual amount, and this is the ITC. And some of the ITC is not eligible. So they will show the same thing, total amount, and we have to, what we have to do is, sorry, we have to show the, see, this is the liability. What is the liability? Not sales. And the 3.1D, 3.1D, inward supplies applicable for purchases. Inward supplies means when you reverse charge, it is shown in the eligibility. So this is the total amount. So in the 4A3, interest in inward supplies means purchases This is outward. Applicable for reverse charge 250, 250 is the ITC. So there are some other items. The total will be this one, except one or two. Except these two, reverse charge mechanism applicable this. So if there are some other items, the total will be shown here, but is only one, so only one is shown. And then, and after that, if there is anything which cannot be claimed, what we have to do is we have to reduce that. For reducing, we should not make manually reducing. We have to make it as, we call it as reversal, so reduction. So for this, we have to show this is the available, this is the reverse charge, what you call available ITC. And here input tax rate reversed. If anything is reversed, so according to section, we have to make it enter here. This manually you have to enter. So automatically from the total receivable, total amount will be there here. Out of the total, whatever is reversed, the balance amount will be net amount. Net input tax credit. This will go to the, that is the payment ledger, that is in the 3B. So when you are making the payments, this will be shown as the, along with other ITC, this will be shown. So like this, so it is showing liability as well as it is showing liability, it is showing, and if you take it off, see here, liability it is showing and ITC also it is showing, because both we have to create later, because we are not making any entry in the books. So we'll go to the next one. Next one, date is the same one. Again, received right charges, this what you call F9. Received freight charges bill from registered DGTL local only. So local registered. So for example, the amount will, the number will be 520. I am giving. So here, local registered now. It is also 5%. So registered means they can select 12% also. For registered, he selected also 5% only. That is also, and this one accept, that is registered. And then this is also RCM, that is reverse charge mechanism. Amount is 20,000. So 20,000, sorry, 20,000. So for this party also, we have given the registered number. In the previous case, unregistered, now registered with GST number. Okay. And then here also, you cannot calculate the tax because it comes under RCM. So Alt A, Alt F1. So this is the applicable subject to reverse charge. That is why tax will not be calculated except this one. So now if we go and see, total 30,000 will be shown in the report. See in the report, if you go to the GST reports, 3B, see, total first bill 10,000, second bill 20,000, 30,000, the tax will be 750, CGST, HGST. And input tax credit the same amount, 750. That is, this is the amount, and this is the actual receivable. After no amount is reversed, so net amount is, this is the net amount. Okay. And then we will go to the next entry. We will go to the next entry, and here next entry date is 2/7. So we'll take up. So if you press F2, the immediate next day will come. Some other day means you have to enter 2/7. So I'll give me 1025. Okay. So here we have purchased from GTA registered IS, interstate registered from Chennai, interstate registered, but 15,000. It is not a 12%. So registered person, he selected 12%. So we will go here. So registered IS, na, interstate registered. So actually we will create with the names. So according to the names we have to select. Okay. In the selection, creating the ledger of the party, we will give the name and the state, registered, unregistered, everything will give. So that you can select here. Here, this is interstate registered, IS registered, registered also, IS also, state also. Registered also can select 5%, no problem. But here, in this case, he selected 12%. So IS registered 12%. Okay, accept. It's a registered IS. And here the same thing. IS registered means 12% means forward charge mechanism. So we cannot select freight charges RCM. The RCM is applicable. But here it is forward charge. So I created another ledger. And here see how it is created. The same thing. Everything is same. Number. So both are transport only. Number will be same. So taxable. Here forward charge it is 12%. So 12%. Since it is 12% forward charge mechanism, I mean RCM is not applicable. Automatically applicable labor charge, it has become no. But for anything, ITC is applicable. ITC is yes, and services. That's all. And here, so the amount is 15,000. So amount is 15,000. And here, this is a forward charge mechanism, like another purchase and sale of goods. When you are purchasing goods, we'll enter this. So in this, suppose he is under forward charge mechanism, the transport will collect from us, pay to the government. That is why he will enter the tax in his bill. So in our voucher also, we have to enter that. So this is interstate now. Interstate means if you calculate CGST if you take, it is not calculating. Okay, we have to calculate IGST. IGST also not RCM. This is for other forward charge mechanism. IGST is calculating 1800. Okay, and accept. And here, if you go to the analysis, Alt A, Alt F1. So the amount is shown. Here only one amount is shown. That means we enter the tax in the voucher, but it is correct. That is only one amount is shown. And this is not revert charge. So Alt A, and if you take Alt A, Alt F1. So here amount is shown, but here revert charge is not shown. That is not applicable. Revert charge is not applicable. That means it is forward charge mechanism. So in this, we accepted. So now if you go and see the report for the first two bills, RCM is applicable. So liability and ITC will be shown. For the third one, it is already registered and it is under forward charge mechanism. We will pay the amount, total amount to the transporter. He will pay to the government the GST, and we get only ITC. So in the 3B, see here, if you take Alt F1 details, you see, this is the total amount. This is the liability. For revert charge only, liability is there. Revert charge liability, 30,000 amount is shown. Taxable amount and tax. And now we got for the revert charge amount, we get the ITC. So 750. And for the third one, interstate, that is forward charge mechanism, directly there will be no liability. No liability we pay to the transporter, no liability. And only ITC will get. Since it is interstate, we are getting IGST. If it is also local CGST and HGST, that will be shown in this only. So total will be 900. 900, 650 means 750 means 1650 is the ITC. Liability will be 750. So in this 1650, 900 is the forward charge mechanism ITC and 750 is the. So like this, we make the entries. So this is the entry. So no other items. This is the, see here, revert charge mechanism 750. This 1800 is available. But what is that? Forward charge. Forward charge means except revert charge, all other ITC is called as all other input tax credit. So 1800. It is showing 1800. 1800 it is showing. Okay. And then it is okay. Now what to do now? Now we have to make the payment of liability, and this one, for that, at the end of the month we have to create. See, at the end of the month we have to create the liability as well as ITC for this revert charge only. This is only ITC, so there is no liability. We did not create direct revert charge. And here now, we at the end of the month, what first of all we will do in the balance sheet, profit and loss account. If you go, so Alt F1, both the transport charges are shown, both are created under indirect expenses. But in the balance sheet, so go to this one, duties and taxes, only 1800. That is the forward charge mechanism. 1800 only is shown. Only see here, this forward charge mechanism, 1800 rupees is the shown. IGST is the ITC means debit. ITC is shown. So others are not shown. So I have not made any entry. So only this ITC is already paid to them. The liability is paid to the transporter. This is showing as ITC. Okay. Now this is whenever you paid immediately, it is showing as ITC. But the reverse charge mechanism, we have to create at the end of the month. We had the end of the month for the total reverse charge. This is already we got no liability. For this liability you have to create, then only we can claim the ITC. So at the end of the month we have to create liability because entry is not made. It is showing in the report means we have to show the books also. Liability you have to create, and ITC also we have to create. Creating is also called as booking or increasing. Increase liability, increase ITC, or book liability, book ITC, or create liability, create ITC. So this we can do here by going to Alt J, stat adjustment. This is stat means statutory. It's according to the law. This one you can say, so we can create all these things. But here it will be a problem because here the, along with this RCM transport GTA, there will be many goods and services purchased or sold. When you sell the goods, so liability will be shown here. And when you purchase the goods, the tax will be shown as ITC. So in that, all taxes will be included. In this, all taxes will be, this is 1,500, this is 700, like that. There will be lot of amount. Out of that, what is the amount relating to the river charge? How do we know? How do we can know? Because only now we have only these entries, but other purchases will be there, sales will be there. So sales amount collected in the sales will be shown in the liability. Amount purchased and paid the tax, that amount will be shown in the ITC, just like this. Okay. In the, if it is shown, how to find out, if you go there, what is the amount? How do you know? That is why what we have to do is, in the previous step here, escape here. This is the first what you are doing. GST reports, you're entering, selecting 3B and going to this. So go to the one step back. So in this GST reports, go to the ending, other reports. In this, we can find out the liability for different things. So goods sales and purchases different. Now we require the liability and ITC for revert charge only. So if we click this, there will be all the items will be there. We require revert charge. So revert charge supplies will go. So here, so liability we have to create. This is the liability, and this is the ITC. But here the liability will be created both therefore separately for unregistered dealers and registered dealers, because the unregistered dealers and registered dealers we have to create the liability separately. Liability as well as input tax credit we have to create separately for registered dealers and unregistered dealers. Okay, and here this is the total liability, and this is the liability. This is ITC, the total amount for differently for registered and unregistered. And we are not yet created now. So at the end of the month, we have to create. We have not created. So it is showing us balance to be booked, to be created. If you create, it will come here, liability or ITC booked, created. That's what you have to do. So what you have to do is here. From here, if you create, it will be good. Directly, like along with the help of stat adjustment only. First, we will take up the what you call registered dealers. So enter. If you enter this, it will show you the details. So liability for revert charge. So first one is we selected registered. So local registered. So there are many entries, many local registered people, local or unlocal, registered or unregistered. So this is registered now. So all the registered list will be shown. We are creating with not with name. If we create with name, all the names will be displayed. Their respective amounts will be shown, and the total amount will be shown. The total amount will come down here. This is the total amount. Still, it is not booked. So we will book separately for each name, for each person, X, Y, Z. For each person, we create the liability separately. Okay. So if we create the liability separately, and here for each one, if you create, that will come here. Booked, first one, A created, that will come here, and balance will be shown. B created, that also will add to the booked one, and balance will be shown. If you create for all the people, so the booked will be nil, and total amount will be come to this place, less liability book. That's all. It will be closed. And when you book it, so for each one, if you book, again another will be liability booked. This is to be booked, and liability, this is total liability, and liability to be booked, it will be shown here. For each, all the names will be shown. When you book, it will show booked for that person. Again another booked that person, that will be directly from this shown here. Okay. And here you see liability we have to in the first place. Here we have seen liability we have to give for registered and unregistered, and also ITC also registered and unregistered. Okay. But what we can do is, instead of creating liability separately, and we can create liability separately and ITC separately. So you can create both at a time. That is, both combined totally we can create both at a time. That is, liability and ITC we can create. So for that purpose, it is showing on liability, but we can create both. So go to the stat adjustment, the same thing here. nature of adjustment is, what is the nature of adjustment? Creating the liability, creating the transport, ITC. So increase means create. Increase tax liability we can create separately. Increase input tax credit we can separately. In this case, if we create like that, tax liability, we create input tax credit that will be debited, and create, we have to create some new account. And if you, when you are creating tax liability separately, the debited account in the first one, when you are creating the input tax credit, we created one new account. That account is to be debited like that. So there will be confusion. Instead of that, both if we create at a time, there will be no problem. Debit ITC, credit liability. That's all. So here, so increase in tax liability and input tax credit. So that I have to take. And from where we have made purchases, registered dealers, unregistered dealers. First, we are taking up unregistered means registered dealers. Registered dealers, that's all. And we have to do this at the end of the month, 31st May, date you have to give. And now we have to debit the ITC first. Is this input tax credit, the increased liability, and input tax credit from registered dealers. What we have to do? We have to create. First, we have to debit the ITC. What is the ITC? This is the ITC. Along with all other ITC, this one we will take up. What is that? 2.5% of. So registered is 20%, 20,000, 20%, 20,000 is equal to 500. Again debit. Again GST also, that is the original liability. Okay. This is only for RCM. This is also 2.5% of 20,000, 500 rupees. Now credit. So GST and HGST, ITC we debited. Now we have to credit the liability. Liability is CGST, RCM. So, sorry. Credit CGST or anything you can do. CGST, RCM. This is also 2.5% of 20,000, 500 rupees. Now SGST, RCM, 2.5%, 20,000. And here we have to give the details. This is the, from registered person, we are creating this one. So details of that we have to give here. Who is that person? Party name is registered. First one is registered. We have taken local or non-local. We made entry for IS registered. IS registered 12%. That is ITC, forward charge mechanism. For this one, what we took as IS unregistered. See, IS means interstate unregistered. The name will be that. So there we have to select this unregistered. Sorry. Registered you have to take. This one. Interstate registered. This local. We have taken that 5%. Only RCM we are taking. So local registered we have to take. Local registered. So the details will select that name, particular person name. We entered that one. Local registered, and all these details will be at the end. You have to select service. So here, that's accepted. Now we see this is both created. See, so this is the amount to be created. So it is liability booked. This one, and this at the end it's showing to be booked. So it is already booked. So it came here, and to be booked is nil. If there are some other name, it will show the balance. And come back, you see here, these two, liability and for registered person, registered dealer, liability and input tax get created. That's why that come transferred to this place. Here to be booked is no. Now to be booked means balance is unregistered dealer. Go to the unregistered dealer, select, and again also stat adjustment. So go to the this one, input tax credit and liability, and now we are purchased from unregistered dealer. Date is the same. Here also go to the CGST, 2.5% of 10,000. That is first bill. 10,000. It is 250. Again debit. SGST also 2.5%, 10,000, 250. Then credit CGST. We can, anything you can take. Sorry, anything you can select. CGST. This is RCM. CGST RCM 250. And then again SGST RCM. This is also 250. Then come down here. This is unregistered local. We have taken local unregistered 5%. That is local unregistered, and the name of the person will come there. Service, accept. So this is completed. See now, see this one. This is also created. So to be booked nil, it is created. So it is created. That is booked. Now come down here. So others also came here. So everything is done. So liability created, and ITC created for separately for registered dealers, unregistered dealers. Now come down and see the, come down to profit and loss account. There will be no change. the same expenses will be shown. And in the case of balance sheet, if you come, see Alt F1, see here, duties and tax, still it is showing only 1,800 because this is already claimed by us because we paid the liability, it is claimed. But in the case of RCM, so we created the ITC, we created, liability also created. Till you pay the liability, this ITC we cannot claim. That is why both are available, debit, credit, debit, credit. That is why this is only one item is showing. If you make payment of this will be added to this. Total amount will be shown as ITC. Now we see, okay, this is 31st month, end of the month we added. Next month by 20th, you have to file 3B. So when you are making the filing the 3B, we have to make the payment of other taxes after adjustment and pay the RCM liability. If you make the liability, that IGST, I mean ITC also will be added to the other IGST, and along with not IGST, ITC. All the other ITC, total ITC can be used for setting off or adjustment against the all other liability, means all forward charge liability. Okay, so now we have to make the payment. When you will pay by before making the, I mean filing the 3B, but here 3B will be filed before 20th is the last date. But here you will have the education version. In that first, second, and 31st only can open. So we can take it as second. So here date we are making, it is actually showing as voucher. It is showing general, not general. We are making the payment. So F5 and date is I am taking 28. 28 I am taking, you see, 28 RCM book liability, booked RCM liability 31st, and second RCM liability is paid. Okay, and then now 28 we are taking, and here what to do, liability, this is the liability, GST RCM, IGST, not IGST, HGST RCM. These are credited. Now debit them and credit bank. So it will be closed. But actually we have to do some more details. For that purpose, directly manually we cannot make the entry. So just like statutory adjustment, we have given some details and created. Similarly here also for making payment also, that is on 2nd August page also, we have to make an automatic entry. For that purpose, we have to use Alt Control F autofill. Control F autofill. It will ask you many details. We will give all the details. So we have to use that. That means it is enabled, means we have to make automatic entry with autofill. If it is disabled, we cannot use it. Then we have to make manual entry. It is available. So select this one. So what is the autofill? Type of transaction is payment, statutory payment, and tax type is GST. What is the amount you are paying? GST or income tax? GST you are making. What is the tax you are paying in GST? Reverse charge amount or other amount? So tax reverse charge, tax other than reverse charge. Now we are paying reverse charge. So select reverse charge. The period is 1st July to 31st July. That's all. So liability is CGST, RCM. Total amount is both registered and unregistered. So 750. We are making the payment. Again debit. GST, RCM. RCM we are making payment. First one is 250. Second one is 500. Total 750 CGST and SGST. And here we will pay all the taxes by check or through bank only. So we will write State Bank of India here. So the State Bank of India, when you make payment, it will show a negative balance. For that purpose, what I did is forgot to tell you in the beginning, capital 10,000 liability and asset bank balance 10,000. Who created opening balance? So they have opening balance. It has 5,000, 10,000. Out of that, we are making 1,500 payment and 1,800 rupees will be there. For 8,500 is the balance. And here check number, we will see here how we paid. We can give it as check. See here, if you go here, space bar, if you click here, check. E-funds transfer means online transfer, UPI. Others means RTGS, yes, RTGS, all these things. So, but we are making only, we take it as check. Okay, check, and the number is 1, 2, 3, 4, 5, 6. And the date is, so we are making payment on 2nd, but the check may be written on the same date, 2nd, okay. If it is made some previous day, 1st August, then we have to make it as 1st August. If it is prepared previously, otherwise on the same day prepared, you can take it as 2nd August. And here you have to give the details. Yes, you have to do here. Mode of payment, check. Then bank will be SBI, State Bank of India, the full name, State Bank of India. These are all related to the challan numbers. Okay, these are numbers. And the payment date is 2nd August. Instrument number means check number 12356. Instrument result, now it is taken as the same date, taken, already paid. Okay. So when the ITC, I mean liability is paid, then we can claim the ITC. Okay, come to this one, and here you see, go to the, sorry, not GST reports, go to balance sheet. Profit and loss account, no change. Profit and loss account, there will be no change. Balance sheet, if you go to Alt F1, now it is showing, see, this additional tax as 3,300. So 1,800 rupees FCM, RCM 750, 750, 1,500. Total 3,300 is showing. If you come down here, click it. See, GST, HGST, 1,800 rupees FCM and 750, 750 RCM. Liability is also there previously. That is closed. It is paid. It is closed. That is why you can claim this. So it is added to this and total is shown here. This is about the entries for the under the RCM method for the GTA. All other services also the same thing like 5%, because in the case of other ITC, other services, rate is 18%. There will be no 18% RCM. Here 5 RCM, 12 forward charge mechanism only for these two, for one. These all others only 18%. All the entries you can make for 18%. And in this case, you take the second problem, see this one up to this, and go down and see the balance, and you work out both the problems. Okay. So with this, I close this session. So wish you all the best. Bye.